Get ready for the next iteration of you on your path to becoming wealthy. On this show, you'll get the insider's view on wealth creation, the class none of us got taught in school, with my co-host, daughter, and beginning investor, Sophia Bosch. And now, let's get started. Welcome to the Becoming Wealthy podcast. I'm your host, Michelle Bosch. I have my co-host,
Sophia Bosch.
And we are excited today because Sophia is going to be learning about the difference between being income statement wealthy versus being balance sheet wealthy. And I actually have for Sophia an example on the whiteboard with actual numbers so that you can already start to distinguish and see patterns, because I think most people can understand, that active income is income where you have to work and you need to exchange hours for dollars, but they don't see how that really that activity translates to personal financials. And so I want to show you basically the difference between being able to make money by exchanging hours for dollars, which you have been doing a little bit because you have a job. You have been doing cash flips for land. But I want to also explain to you how we create balance sheet wealth that actually comes from assets so that we can create income from assets. Those assets spit income for us, that lasts maybe 5, 8, 10 years, or even indefinitely for the duration that we actually own a piece of property. So with that, let's go on over to the whiteboard so that we can actually see, the difference on an actual whiteboard with numbers and specifically with your numbers right now and how, your income sources look at the moment. Okay, let's go on over. Sophia, I'm excited. This is one of the probably most important lessons that you can learn in terms of financial literacy and wealth building. So are you ready?
Yes.
Okay, so on this side of the board, I have an example with your numbers of your personal financial statement and how you're creating income statement wealth right now through, and we're going to discuss it, your income sources that are active income, that where you're actively doing something and exchanging hours for dollars. On this side of the board, I have, balance sheet wealth, which is basically wealth and income that you're producing right now and you're creating from assets that you own right now. So let's start here on the left-hand side. Are you ready?
Yes.
Okay. So what are your income sources right now?
My job.
Okay, and part of that is modeling, income that you're getting, and you're getting about $500 every other week. So in a month, you're making $1,000. In a year, you're making $12,000.
Yeah.
Wonderful. And that is being put basically into a bank account where you can't get your paws in at the moment.
Okay.
Because that is basically going towards tuition income in the future, right? Okay, so you also have a land business, and and some of that land business is producing cash flips, things, basically pieces of land that you're able to wholesale for quick cash. And so far, you have about $9,000 in cash from active land flips. But what happens if you don't continue doing mailing and doing marketing and doing lead gen? What happens to your business, to your land business right now?
It stops.
It stops, right? So unless you're feeding the machine and you're creating more leads to put under contract and selling and working at it, you're not producing cash flips, at least wholesale flips and wholesale income, right? So most people basically live in this world. They have a W-2 income, basically a corporate job or a job of some sort. Business owners, your business right now has only produced $9,000 in revenue, but there's business owners that are producing, $5, 10, 20, $30 million in revenue, but they're actively doing that, and they have a team and they have obligations. The same goes for professionals, doctors, dentists that might have their own practice. This is basically what they are doing in order to produce their income, and then from that they subtract their expenses of their lifestyle, of their business, to run their business, and they end up with net income. In your case, your net income right now is about $21,000. I'm sorry, about $21,000, and it comes from you having to work.
Yeah.
What are some things that you're doing for your land biz? Like, can you just walk me through quickly some things that you're doing?
Sending out mailings, talking to people on the phone, comping deals.
Uh-huh.
What else? there's a lot more reaching out to realtors or reaching out to potential buyers.
Creating listings.
Yeah.
So all of
All of
these
it.
things,
It's a lot.
exactly are basically requiring that
diligence.
you're actively doing things in order to produce, that income. And okay, now let's talk about on the balance sheet side, because like I said, this is the beginning of building your personal financial statement on the income side, the income statement side.
Right.
So now let's look at what's happening on the balance sheet side. So you have right now a property that it's going to be selling, and the note receivable is going to be about $17,700.
Receivable.
Okay, so
after that, once the note is paid off,
yeah.
that's how much I'm.
No. So
Okay.
let's start at the beginning, which is a great question, Sophia. So how wealth is being created on this side is not from us actively doing things,
Right.
but wealth on this side, on the balance sheet side, is being created by something called assets.
Yes.
Assets can be in the form of cash, can be in the form of real estate, can be in the form of stock, could be in the form of crypto, It is an asset. It's a very volatile asset. It's not my asset of preference for sure. Our asset of preference is real estate, just because we understand it. We know how to make it cash flow. And more than anything, it brings us passive income, which is what balance sheet wealth is striving, for. So in your case, assets are things that you own. Right now, you don't have any deals under contract. You don't have any inventory. The inventory that you did have, you were able to sell. And the one that you right now are selling, is going to be selling for about $22,000. And we talked about in a prior episode that we're going to ask for a down payment of about $4,400. So that's going to leave us 44 or 43. I can't remember what the numbers were. But that's going to leave us basically with a balance. If we're selling it for $22,000 and somebody is giving us
Just subtract.
and someone is giving us a down payment.
Is that without interest then?
This is without interest. Yes, this is
Okay.
without interest. So basically now you don't own the property anymore. The property is now being owned by the buyer. But what you do own is the loan against the property. And so that loan against the property is called a note in the land world. It's called a land note. And so because we're going to be receiving money every single month, we call it a notes receivable.
Okay.
And that's where that comes from.
So this is just the simple number without.
And this is the value of the balance of the loan, basically what people still owe you on that piece of land. They owe you $17,700, right? And now what's going to happen, that buyer is going to make every single month, they're going to send you a check in the mail. And you're going to go to the mail with the key, open it up. I mean, they're going to be doing direct deposit. But if you were actually receiving a physical check, you would go to the post box,
Right.
open it up, and open an envelope, and voila, you would see $300.
Yeah.
Now, in this new world, not when I started. When I was starting, I was getting still those checks in the mailbox. But now you are just getting a direct deposit into your bank account every single month for $300 for the next 8 years, from that person that is still owing you, and they're still making payments,
Right.
on that piece of land. So now for the next 8 years, there's $300 coming every single month. And now what is that? That is income. But that is income that is very different than this income. In this income, you had to basically continue
Right.
operating and exchanging hours for
And
dollars
this
and
just
actively working.
comes-
And this just comes. You worked once to sell the piece of land. You created the note of $17,700, and now every single month for 8 years, they're sending you basically $300 a month. And this is what we call in the real estate world, and just in wealth generation, we called passive income. Now, part of the balance sheet is also not just the assets, but the liabilities. What is a liability? A liability is what you owe. If assets are what you own, a liability is what you owe against that asset. In this case of your land,
Closing costs?
you've already paid.
Yeah,
You've
because
already
of
paid
the
for
down
closing costs.
payment.
Exactly. The down payment took care of that, and the down payment also took care of what we paid for the property, right?
Right.
So in this case now, your liabilities are pretty much zero. And what this has now created, this whole scenario has created now the situation that since you have an asset of $17,700 and liabilities of zero, you have a net worth now of $17,700. And that means that right now you're worth, not just what you could actively produce in income,
Right.
but you're also worth what this asset is at, which is $17,700. And on top of it, the beautiful thing is now you have net income here, but now this net income of $300 per month is happening with you having to work for it. So without having to work for it. So that is basically the biggest distinction. And right now it might not look as a whole lot, $300.
No, but once it compounds.
But once it compounds and you don't have just one notes receivable, but can you imagine having 200 of these little guys here, producing income? And that's what I think gets most people stuck on the world of the income statement wealth.
They can make more here.
They can make more here quicker. Exactly. Oops. They can make more here quicker, and this looks like a big dollar amount, but they're having to basically constantly be slaves to those activities that produce this income. And if they're not doing those activities, this income is not happening. Yeah. If they don't go to if you don't go to a job or you're not a doctor and you're not seeing patients, what happens? There's no money coming in. Yeah. So here
you need this in order to create that.
Exactly. You need to start with this
money.
Exactly.
So then
you can invest and actually invest in assets that can basically produce you monthly income, and that income is passive. Yeah. So is it clear as mud or clear?
Clear.
Okay,
clear,
wonderful. Then let's go back to the recording studio. I had a lot of fun. I hope you had a lot of fun. But let's do a little quick recap of income statement versus balance sheet wealth. So on the income statement wealth side, what's happening? What are the typical income sources?
So your job. Basically what you're doing actively to make money. That's what I...
And in your case, it's your land business when you're doing what kinds of flips? The seller financing flips
flips.
The cash flips? Absolutely. Now, why are most people stuck in that world?
Because they believe that they can make more money faster, or if they need that urgent money, they feel like it's easier to they prioritize that over balance sheet wealth. That
is absolutely right. And you know what? In order to create balance sheet wealth, we need active income as well.
Yeah.
So active income is actually a beautiful thing.
And if you have a lot of expenses, though, that active income can shrink down very little. So investing it might not.
Yeah, basically, if your expenses are not in control, those expenses could exceed the income, and then you're in debt. But if they don't exceed the income, now that gives you a residual, basically something that is left over at the end that you can use to start investing in buying assets or investing in assets that actually produce income. Yeah. So active income is important. It's the beginning of the whole wheel of wealth, However, we don't want to get stuck there. We want to progress. And I know you're already progressing on the balance sheet wealth side, which is composed of assets and liabilities. So what are assets?
Assets are things that you own that can produce you that passive income.
And what are liabilities?
Liabilities are basically things that you owe on your assets.
Yeah, exactly. What you own against them. In your case, we had, we talked about that $17,700 notes receivable from a land flip where you're selling it using seller financing. And the outcome of that is that notes receivable is an asset and it's producing for you passively $300 every single month. And now we just need to turbocharge that and turn that into maybe 10 deals, then maybe 20 deals, then maybe 30 deals, then maybe 50, maybe 70, maybe 100 deals.
Sounds good.
Yeah, that sounds good.
Plus, if you calculate that and see how much you're getting per month, $300 is at least for me as a teenager, like $300 a month, and you know that it's coming in every month. It's nice to know. Like, you have a little bit of spending money.
I mean, if it's 10 deals, that would be $3,000, right?
Yeah, that's...
If it's 20 deals, that would be $6,000.
Yeah, it's
right?
sounding better to me.
Yes. If it's 30 deals using seller financing, that would be $9,000. I mean, most people's, when it comes to their security plan and their lifestyle, especially for you, in college, I mean, I don't think you're going to be spending, not going to be using up that. So if in the next few years, we're able to grow that passive income and your notes receivable, they can carry and take care of your lifestyle expenses during the duration, for the duration of the 4 years that you're in college. So I'm super excited. Good job, Sophia. Let's keep going.
You could also pay for an apartment.
Yes, absolutely. Yeah, absolutely.
Good
you could
stuff.
definitely pay for rent and take care of your housing. So I hope you all watching or listening were able to, get the gist of the importance of not just producing active income, but moving and transitioning eventually into the balance sheet wealth world, which is the world of assets. I always say, a girl's best friends are her assets. Exactly. Because, I'm a firm believer that for most women, the stories of money for women are stories where, perhaps there's not enough money for retirement because this wasn't thought through or wasn't thought of earlier, in their life, or a spouse passes away and there's no assets to really help her, stay financially afloat because they were doing all the active income generation, the income statement, wealth generation. If you were to get sick, that your $300 per month are going to keep on coming in, whether you're sick or not, whether you can work or not, those will keep, coming in. So I think that's basically the main importance. And if you like today's episode, leave us a 5-star review. Actually leave us a little note there, a little actual comment. We love reading the comments with Sophia. So we would greatly appreciate that, and just share the podcast. That's how we get to, share this wisdom and this knowledge with many more girls out there, or teenagers, whether, they're girls or boys. Every single one of us needs to know this kind of information. It's stuff that is not being taught in schools, and that I'm making a point that Sophia is learning, outside of school, to set her up for success in life. Because one day, Mom and Dad are not going to be there, right? I know you don't want to think about it, but it is the case. So thank you so much. And until the next episode of the podcast, see you soon.